Are you interested in exploring the latest developments in blockchain regulations, cryptocurrency hacks, and blockchain-backed platforms? Then don't miss out on this episode. In it, Dennis discusses these topics, as well as the various regulatory frameworks that have been proposed and implemented, and their potential implications. Let's dive in.
Welcome to the Law of the Future podcast. It features articles and insights from Dennis Hilleman, an international expert in law and technology. He is a partner at the Hamburg office of the global law firm Field Fisher.
As blockchain technology continues to revolutionize the digital economy, it is important to stay abreast of the latest developments. Starting this week, on January 9th, we will be exploring the latest advancements in blockchain, taking a deep dive into regulations, cryptocurrency hacks, and more. We will break down what these developments mean for businesses and individuals operating in the digital space, and how to navigate them. Join us for this exploration of the cutting-edge technology that is transforming the digital world. This article has been published by Dennis Hilleman on Medium and is read to you by an AI.
Jail time for insider trading. It's been a big week in the crypto world with news of a Coinbase insider trading sentence that shook the Bitcoin price. Last week, a former Coinbase engineer was sentenced to 8 months in jail for insider trading and fined $15,000 for attempting to profit from trading in advance of Coinbase's launch of Bitcoin Cash in 2017. The news sent shockwaves through the crypto market, with Bitcoin's price taking a sharp drop shortly after the sentence was announced. Despite the impact of the news, the long-term outlook remains positive for the industry. The decision to sentence the engineer for insider trading sends a clear message to those in the crypto world. Those who attempt to manipulate the markets will be held accountable for their actions, and that any attempt to use insider information to make a profit will not be tolerated. The Coinbase case also serves as a reminder of the importance of maintaining robust compliance protocols in the industry. Regulators are closely watching the crypto space, and in order to meet their expectations, companies must ensure they have clear and effective controls in place.
More crypto hacks expected. The decentralized finance DeFi space has seen tremendous growth since its inception. Many projects have launched, new ecosystems are being developed, and more people are now trading and investing in DeFi projects. However, with this increased use comes increased risk, as the DeFi space is more susceptible to malicious attacks and hacking. This is why security experts believe that the DeFi space should expect to see more cyber attacks this year. As more projects are launched, the attack surface increases and hackers become more attracted to the DeFi space. Moreover, DeFi projects are often built quickly and many times are not properly audited or have adequate security measures in place. This leaves the project open to exploitation and attacks, and hackers are taking advantage of this opportunity. To protect DeFi projects from attack, blockchain experts recommend putting security measures and protocols like multi-sig wallets, permissioned access, and smart contract audits in place to protect against attacks. Additionally, developers should perform thorough security checks and audits for projects regularly, as well as ensure that there is a secure process for bug bounty programs and bug reporting. Furthermore, it's important for DeFi users to be aware of the risks and take proper steps to protect themselves and their funds. This means not storing funds in DeFi projects that are not properly audited and putting strong authentication measures in place for account access. Additionally, users should be sure to review project terms and conditions prior to investing, as well as be vigilant of scams and phishing attempts. As the DeFi space continues to grow, it's important that project creators, developers, and users take security seriously and stay aware of the risks. By implementing proper security protocols and taking appropriate steps to protect themselves and their funds, users can help the DeFi space progress safely and securely.
New crypto regulation developments in the United States. The U.S. election of 2020 saw a dramatic shift in the political landscape. One of the top priorities for the new Congress is protecting the privacy rights of Americans, and blockchain privacy groups are urging incoming lawmakers to make this a priority. Recent advancements in technology and the rise of cryptocurrency have made protecting the privacy of our citizens even more difficult. Whether it is government surveillance or corporate data collection, our privacy rights are being eroded. Blockchain privacy groups are advocating for legislation that will help protect our right to privacy and provide an avenue for recourse if those rights are violated. The first step for the new Congress is to pass legislation that ensures data protection for U.S. citizens. Blockchain privacy groups are calling for strong regulations on data collection and usage, as well as laws that prevent government agencies from accessing personal information without a court order. It is also important for the new Congress to recognize the growing power of blockchain technology. Cryptocurrency is now more mainstream than ever, and blockchain technology has far-reaching implications that go beyond the financial realm. Blockchain technology can help to safeguard people's private data, create secure contracts and forms of digital identification, and provide new methods of financial transactions. In order to make the most of this technology, it is essential that the new Congress implements laws that protect the privacy rights of individuals, while also allowing the technology to thrive. These laws should be transparent, enforceable, and recognize the importance of our digital liberties. Blockchain privacy groups are hoping that the new Congress will take up this challenge and ensure that all Americans enjoy the privacy rights that they deserve.
New crypto regulation in Argentina. Argentina has recently proposed a new law that would require cryptocurrency holders to disclose their holdings as part of a larger effort to combat money laundering. On one hand, the disclosure law could help to promote transparency within the cryptocurrency sector and help to create a more secure environment for investors and consumers. On the other hand, some critics are concerned that such measures could have a chilling effect on cryptocurrency innovation and adoption. The proposed legislation, which was presented to the Senate by the Ministry of Finance last month, would mandate that digital currency users disclose the details of their holdings. This would include identifying their wallet addresses and the value of their holdings. The law would also require that cryptocurrency exchange platforms and custodians report their clients' activities to the government. The goal of this disclosure law would be to help combat money laundering, terrorist financing, and other illegal activities. The potential benefits of this law are twofold. First, it could help to create greater transparency in cryptocurrency transactions and discourage illegal activity. This could in turn lead to increased confidence in the sector from both investors and from regulators. Additionally, it could help to create a more level playing field for those who are using cryptocurrencies for legitimate purposes. At the same time, some groups have expressed concern about the potential implications of the proposed law. For example, some have suggested that it could have a chilling effect on cryptocurrency innovation and adoption. They argue that such stringent disclosure requirements could make it difficult for emerging companies to access the capital they need to bring their projects to fruition. Additionally, some worry that it could create an additional burden on existing digital currency users, leading to a decrease in their use of cryptocurrencies. Overall, Argentina's proposed crypto disclosure law could potentially have a major impact on the cryptocurrency ecosystem in the country. While the proposed law could help to promote transparency and discourage illicit behavior, there are also concerns that it could have a negative impact on cryptocurrency innovation and adoption. As the legal process moves forward, it will be interesting to see how this proposed law is ultimately implemented and what impact it has on the cryptocurrency sector in Argentina.
El Salvador allows crypto bonds. El Salvador recently made history as the first country in the world to recognize Bitcoin as legal tender. This groundbreaking move from the Central American nation has given rise to a new wave of financial opportunity, with the crypto law allowing for Bitcoin-based bonds to be issued for the first time ever. At the heart of the crypto law is a move to expand the accessibility of the traditional financial system in El Salvador. The law, which was passed by the country's legislative assembly, permits citizens to use Bitcoin as legal tender for any payment. This open access to financial services gives citizens the power to make payments and manage their wealth in a more secure, efficient, and cost-effective way. Additionally, the law creates a framework for Bitcoin-backed bonds, allowing companies to issue bonds denominated in Bitcoin. This is the first of its kind program in the world and could potentially open up a whole new asset class to investors. Bitcoin-based bonds have the potential to offer a valuable alternative to traditional forms of bond issuance, enabling companies to raise capital in a quicker, simpler, and cheaper way. The crypto law is set to revolutionize the capital markets of El Salvador and beyond. Bitcoin-based bonds open up the possibility of tapping into a new market of investors and offer an attractive alternative for those looking for a safe, secure, and cost-effective way to earn returns. By making the process simpler and more transparent, the law can provide citizens with greater access to capital and the ability to diversify their investment portfolio. The crypto law of El Salvador is a major step forward for the country, providing citizens with the opportunity to access financial services in a simpler and more cost-effective way. The law also creates a framework for Bitcoin-backed bonds, giving investors the chance to invest in a secure and transparent asset class. This is set to revolutionize the capital markets of El Salvador and beyond, making investing easier and more accessible than ever.
If you want to keep up to date with blockchain developments, go to www.blockchainlawyersnetwork.com and join up for free. Daily, you will find new information on regulations and advancements concerning blockchain and crypto.
Thanks for listening to this week's episode. If you want to keep up to date with technology and law, connect with Dennis on LinkedIn. Share your thoughts and reach out to him. See you in the next episode.